lovely Thursday morning. Today we are with Swarm Markets. We are going to discuss a lot about uh, real world assets and tokenizing them, and how blockchain is helping make those assets more liquid. How blockchain is helping make those assets better. Now, before we start the spaces, I'll like to introduce myself. I'm Kevin. I work as a marketing and business development manager at MetaPath. MetaPath is a Web3 aggregator. We aggregate NFTs, GameFi assets, metaverse assets, and tokens from over 50 blockchains at one platform. You can buy any token, any NFTs, any assets from any other token. So you can buy NFTs on Ethereum with Solana or Arbitrum or whatever currency you like. There are lots of things in MetaPath. You can go to metapath.me and visit them. We have AI tools as well. So if you are a ChatGPT premium subscriber, you can go ahead and use a plugin, MetaPath, to do your NFT analysis, to do your Web3 analysis. You can get historical data about uh, different tokens. You can get historical data about your NFTs. You can compare them. You can ask ChatGPT to compare them and take advantage of the AI. We have AI on our website as well, so you can 100% use it over there. So that's a basic intro about MetaPath. Hey Timo, welcome to the Spaces. Am I pronouncing your name right? Uh, Timo, can you hear me? Hey there.
Hi, this is actually Katie from Swarm. I head up business development here, but Timo should be on the line. He's going to be the main event today.
Yeah,
I'm on the line.
Here he is. Knew we found him eventually.
Hey Timo, how are you doing?
Yeah, ready to kick off.
Yeah, awesome. Can you please, hey Katie, I hope you are well as well. Can you please introduce yourself? We would love to know more about you, and then we'll get into this AMA Twitter Spaces and learn about Swarm Markets.
Yeah, sure. Timo, do you want to kick off with a bit of your background? Because today's about you, not about me.
Okay, no worries. So I guess I'm kind of a crossover between tech and finance. So out of university, I studied computer science, and then I built a company, software company, directly out of that, and sold that company, and then moved to the U.S. to work for a larger kind of software firm. And I built a business for that larger software firm. And then after that, I kind of moved into more of the financial services side. So I joined a venture capital fund in Sweden and worked on as a portfolio analyst there. And then I did 4 years of M&A analysis and integration work in London. Also boutique advisory, financial services stuff. And after that, I ran a venture capital fund in Sweden, early stage investing. And I did a bunch of investments, and a few of those companies moved to Silicon Valley. So once we closed the fund for new investments, I moved to Silicon Valley as well. Sold 2 of the companies, and 2 others IPO'd back in Scandinavia. And then, I was kind of building my own little portfolio there. I lived in Palo Alto and made some investments, and met Philip, my co-founder in Swarm. And we started talking about various things that we could do together, some of it blockchain related, some of it not. And then we decided to basically, because we both had backgrounds in venture capital and private equity, we figured that to be using blockchain for the purpose of creating liquidity for very illiquid assets, we thought was a great idea. So that's why we started on this path of where we are today with Swarm. And we've been kind of committed to create liquidity solutions for illiquid assets for a long time. And then, the most recent iteration of that is obviously the stuff that we built with real world assets in terms of public stocks and bonds. So yeah, we'll be talking more about that, I guess.
Yeah, 100%. That's quite a resume. I'm really interested in hearing about your experiences and the product that you are building. You have experience in building
So I
products. You
think
have
there might
experience in.
be an issue now with the host account or from MetaPath.
Can you hear me? Hey there, can you hear me?
I think there might be some problems going on with Timo's connection, perhaps. Shall we continue? I'll do my best to fill in the gaps.
I think Katie, I think my connection is all right. As long as you could hear what I said before, I think that's fine, right? But I'm not hearing anything from MetaPath.
Can you guys not hear me?
I can hear you.
Yeah, you can hear me, right? Katie, can you hear me?
Yeah.
Timo, can you hear me?
Okay, let's figure out what's the issue there with the MetaPath access.
All right, we might be having some issues with Timo's speaker, but I'll do my best to fill in the gaps if you wanna continue.
Okay, I'll continue asking questions and maybe you can share it with Timo. I know there has been some issues with Twitter Spaces lately, so we'll see what we can do.
So we just carry on, yeah?
Yeah. Okay, so can you introduce Swarm Market to the audience and people listening? Like, what is Swarm Market and what are you doing with Swarm Market?
Yeah, so I think there's actually a few people on the line today who are from our community, which is really nice to see. In a nutshell, what the guys set out to do was create a liquidity solution for tokenized securities, so on-chain trading of securities. And this quest really started back in, I would say, 2016, 2017. The guys actually created open source infrastructure to tokenize securities. But the problem was always, where do these tokens then get traded? And that's when they sort of scoured the regulatory landscape with this notion that any platform or environment where these tokens would be traded would have to be regulated, just because of, in essence, of what they are, and in this case, they're securities. So they started off in the US, which is where they met, in Palo Alto, around the time when the Mark Zuckerbergs of the world were walking his dog, starting Facebook. And there were a few platforms at the time that were trying to solve for this, like the likes of T0, which, whilst they were big fans of, didn't quite cut the mustard in terms of what we were looking to do. So then in 2020, it was actually the Germans, who are not always known for their forward-leaning sort of approach to things, but they actually made an amendment to their Banking Act. And what that did was it brought crypto products in line with traditional financial products. So anyone that was dealing in crypto had to be regulated as a German financial institution. Now, for a lot of platforms, this was not a good thing because it meant that they had to be licensed. But for a platform like Swarm, it meant that there was clarity as to how these products would be viewed or treated by a regulator, and that provided a lot of clarity. So I think Philip had already moved back to Germany by that point, and Timo and his family were moving back to Europe as well. So it made sense to launch the platform with a German regulatory status. So today what we have is we have a forward-facing, or public-facing environment, a DEX, where you can go on there today, you can onboard, go through KYC and AML, and then you're able to actually trade tokenized versions of public stocks and US treasuries, and actually understand what that means to trade on DeFi. So all the great things like transparency, self-custody, 24/7 trading, so no market hours, all of that can be done today on swarm.com. And then if you go, and then behind the scenes, we're talking to a lot of TradFi and institutional participants about how they can white label our tech as well. Hopefully that wasn't too much of a soliloquy and there was some useful information in there.
Yeah, it's 100% useful information. Now, when you say you are tokenizing real world asset, what does that actually mean? And what kind of assets can be tokenized? Can you please share more on that?
Sorry, can you repeat that? It cut out slightly.
So when you say you are tokenizing real world assets,
Mm-hmm.
what does that actually mean? Like, what are you actually doing with those real world assets that means that they are now tokenized? And what kind of assets can be tokenized? Like, what kind of real world assets can be tokenized?
So put simply, the art of tokenization is essentially producing a token that can be traded on the blockchain, which represents something that exists. I always say in the real world, even though I'm told off for saying that. But essentially, it's this link, right? It's this integration between something that exists, whether it's tangibly exists, like a car or a luxury watch, or whether it's something that exists online, like a share or a stock or a bond, and creating a digital representation of that can be traded on chain. So the idea or the notion of tokenization is quite a simple one, I think, to understand. But actually, that process requires a lot behind it if you want to do this in a credible and trusted way. I think when we talk about moving on chain, we talk about trustless infrastructure, which is fantastic, but we need to know that the things that sit behind that are trusted. And that's where we feel regulation really makes a play here. So the way that we tokenize items or products, we go out into the traditional markets. We have brokerage accounts because we're regulated as a German financial institution. We're able to go and set up or have those partnerships with TradFi. So we go and buy public stocks. Let's use that as an example for now. From public exchanges like the NYSE or London Stock Exchange. The ones that you would typically go to. So we go and buy those products, we put those in custody, and then we mint a token that represents what's held in custody. And then really importantly, so that token is then what is traded 24/7 on chain and is held in your own wallet, which is a really crucial part of that puzzle, especially with what we saw last year with the likes of FTX and Celsius ending in the way they did. But what sits behind that trust piece to actually get that says what that product is sitting or that share is sat in custody, and then that token being minted to represent that takes a whole trust element to the next level, really. So we're doing things like we have monthly proof of reserve reports that we publish on our website. We also have an independent auditor that goes in and says, yes, what is held in custody here is reflected on chain over here. So those two elements are quite critical to building that trust and getting people to come in and actually trade those tokens. In terms of your second question around what can be tokenized, the simple answer to that is pretty much anything. Anything that has value or anything that people want to use on chain for, whether it's trading purposes, lending or borrowing, or some sort of collateralization activity. Anything in theory could be tokenized and brought on chain.
That's really amazing. Why would anyone want, let's say, a real world asset on a blockchain when they can buy that asset in real world? So let's say, if there is a stock that I can buy in real world, why would I want to buy that in a tokenized form on a blockchain? if there are treasury bonds that I can buy in real world, why would I want them to buy on blockchain? So what's that compelling thing that that wants people to buy these things on chain instead of them buying directly on real world in real world? So what is that thing?
Honestly, it depends who you're asking and where they sit in the world. So it's really easy for us. I mean, I don't know which part of the world you're sat in. I'm sat in London currently, very rainy London. But right now, it's very easy for me to go on to eToro or Free Trade, log on to a traditional brokerage account and buy stocks. What I can't do is, though, I can't then go and lend and borrow against those stocks, right? So I have to wait for the price to go up and down, whether I want to make money on that or not. And but I can't do anything with it in the meantime. So it just becomes idle collateral that my money is tied up in. When you move that asset on chain, you then get to be exposed to sort of like a plethora of different activities that then enable you to do more with that asset. So, throwing it into a lending pool eventually when that, becomes enabled, or being able to go and deposit it into some sort of account where I can earn X% in yield because someone's borrowing that asset to do something else with it. There starts to become this whole sort of opportunity of activities as a result of moving that asset on chain, and that's when we like to talk about the composability of DeFi. Being able to build different and new types of products with these tokenized assets, but then also doing different things with them as well. So that would be the sort of compelling use case, I would say, for a retail investor sat in, let's call it, like in a Western economic society. Then you've got a whole plethora of people who sit in emerging markets that can't easily go and get just on board with Robinhood today and go and buy Apple stock. You've got a series of people sat in different parts of the world where their local currency is plagued by hyperinflation. And so actually moving on chain and into these less risky assets becomes a really attractive use case as to why we would have tokenized versions of these financial products. And then if you're talking to on the institutional side, which, Swarm, we're able to do both. You've got a few different reasons at the moment why this is useful, and then in time will become more interesting. So right now we've got, I would say, three key groups of institutional investors looking at these products. Firstly, it's stablecoin issuers who are looking to collateralize or support the peg of their token with whichever fiat currency they've chosen to peg it to, with more secure, more stable assets. We've seen quite a few high profiled stablecoin issuers be a little bit murky, I would say, around what assets are in reserve that support those tokens. And I think there's a greater demand now from the industry around what those assets look like. And we're seeing more and more of those go into sort of underlying bonds and things like that. So that's definitely one use case that we're seeing a lot of interest from. Another category of institutional investor would be those managing a treasury on chain already. So a lot of the top crypto firms will have a lot of crypto themselves, but obviously that is a very volatile asset class. It's also a very highly correlated asset class. So we saw last year with some of the, take for example, the Celsius situation, one crypto would go and then it would cause like a cascading effect elsewhere. And, to have a thriving ecosystem, that simply can't happen again. So there is definitely a flight to quality for those who are already on chain. So having, tokenized treasury bonds or certain stocks or even commodities is definitely an attractive proposition. I said there was a third one, didn't I? And I've completely lost my train of thought. This is what happens when I talk endlessly without being interrupted. I'm sure it'll come
Yeah.
back to me.
Yeah, I mean, I can I can clearly think of what you said in both retail and institutional markets. Both are very strong cases, and especially when when you talk about inflation in different currency, and all this policies where there is a lot of inflation, but then there is no way out, or that then there is no investment where you can get good returns even
Yeah.
in those times when there are high inflation. And it is true that USD is a world reserve currency at the moment, and uh, so that's a really good proposition for retail and both institutions. So now the next question, and the question that I'm very interested in knowing answer of. So what assets are currently available on Swarm.com?
So we currently have 9 public stocks. We started with Apple and Tesla, and then we actually did a community vote. So there's a payment token on our platform that people will hold for boost to liquidity provider rewards and discounts on trading fees. I know there's a couple of people from that community here. So we've got Rob and Spen, for example. Um, they actually, we did like a Twitter vote. We had people suggesting on Twitter what kind of assets they wanted to trade or see tokenized and on the platform, and then we actually had SMT community members do the actual vote by a snapshot. So we then added 7 more assets, including the likes of Microsoft, Nvidia, MicroStrategy, Intel, Coupang, which is kind of like the Amazon of Korea. We had an avid community member saying that if you add Coupang, people from South Korea will come and trade. So that was quite interesting. So it's very much like community and demand driven. And then we have 2 iShares iShare ETFs, so administered by BlackRock, representing US Treasury short-term treasuries that are yielding about 4.5%. So the simple answer is that there are 11 tokenized assets that you can go and trade today. We will be making more announcements in the coming weeks about more assets that will be added. But that's the beauty of being a DeFi project, right? We get to consult with the community and potential customers and customers we already have on the platform, saying, right, what do you want to trade? And we're not limited by certain sort of regulatory issues around what can be added. As long as we can go and buy them from public markets, they can be added to the platform, and really within a few weeks. I mean, it doesn't take long at all for us to add new assets, so it's quite an agile setup. We're just relying on people to tell us what we need to add.
Actually, my next question was going to be what's the process of adding asset? Like, how do you figure out which assets to add? But yeah, you already answered it, and I'm really happy to know that it's a community-driven process and community can vote on it. That's the beauty of Web3, and that's the beauty of the industry that we work in. Now, my next question, you have answered it in some way when when you were answering in previous question, but I'll still ask because this is a very important question. How does a user know that their assets that they are holding in tokenized form are actually there, and what your team is doing to build that trust with users?
Yeah, so it's a really valid and important question, and I don't think enough attention gets focused on this because it's so important. I mean, we've probably all been exposed to so many different scams along the way, and so having that trust is so important that what you're trading is actually what we say it is. So at the moment we have monthly proof of reserve reports so it's essentially our brokerage account, which is with a bank in Germany, the oldest cooperative bank in Germany, actually. They essentially print a statement that says this is what is held in in Swarm's brokerage account, and then we do that mapping to what is then issued on chain. We have announced that we want to move towards like a real-time verification process where, you know, any user on the platform can essentially hit a button and say, and pull up it serves you a report that says, a real-time report that everything we say is in custody, is where it should be. There's a few sort of things lacking in Web 2 infrastructure that prevents us from doing that. So it's not actually a Web 3 problem, it's more of a Web 2 problem. So it's something that we are striving towards, and we think the industry should strive towards. But there are a few limitations that prevent us from building that solution right now.
Yeah, I mean, I can understand it would be really hard to get real-time data from Web 2 institutions. Yeah, that's a very fair answer, and I'm actually very satisfied with it. So let's say now you said the tokens that are on the website, sorry, on your platform are available 24/7 to trade when stocks are not tradable on weekends or something like that. So let's say if a user wants to sell their assets, is there a secondary market? How can they get liquidity for their assets? So like, let's say if I want to sell my assets on a Saturday, who is going to buy that assets from me? So can you please dive into it a bit?
Yeah, so we've got two ways that actually can be fulfilled. So we have enabled pools now. So liquidity pools exist today with crypto assets and security tokens. I believe we're the first to have enabled something like that, but don't quote me on it because it's always a bit scary to say you're the first to do anything. But what I do know to be true is that if you want to trade USDC directly for Apple stock, you can go and do that on Swarm today as a retail or an institutional investor. We've also built something which is quite an elegant solution. So it's called DOTC. That stands for Decentralized Over the Counter. And essentially what it is almost like a central limit order book online. So anyone can go and put in a bid or an offer and say, you know, I'm willing to buy at this price, or I'm willing to buy or sell at this price. And then anyone can go in who's onboarded to the platform can go and, you know, take the offer or fulfill the order in some way, even partially as well. So that's where the 24/7 trading comes in, either via DOTC or through pools. So DOTC is quite a nice one for if you've got a particularly large order and you want to remove slippage. It's a nice, elegant solution for block trading. And then pools, obviously, you can get additional benefits of being a liquidity provider in those pools, obviously by earning rewards on top of that. So that kind of also demonstrates already the benefit of trading these assets on DeFi, because you can't be a liquidity provider in a centralized exchange system at the moment. So that's already demonstrating one way to benefit on top of trading this stuff on DeFi. Does that make sense?
Yeah, that does make sense. Yeah, okay. Let's get to the next question. I think I have a follow-up question, but I think it's just my weird head. But yeah, so let's get to the next question. So your website mentions that the tokens are redeemable with real-world assets. So how can you redeem them with real world assets? And let's say if there is any issue, in that process, what jurisdiction rules are applied? Like where, let's say if there is any issue, what, like, from which location the rules are applied, or where everything is done, something like that.
Yeah, so trading of these assets is regulated in Germany, so German law applies there. The tokens themselves actually are all prospectus based. So I'm not sure if you're familiar with prospectus laws in oh my God, sorry, my mind is going elsewhere. Prospectus laws in Europe, it's governed by ESMA, which basically says if you want to sell to retail, you have to have a prospectus that outlines exactly what the financial product is, and we have a prospectus that's registered in Liechtenstein. So what that means is it outlines the entire process of both issuance, redemption, what people are entitled to do, and how those processes work. It's very transparent about how the redemption and issuance process works. It also talks about sort of where the issuer's jurisdiction is. So for SwarmX, which is the issuing entity in this case, it's based in Germany, but it could be in Luxembourg, it could be somewhere else in the EU 27, for example. And all of that gives detailed information about how this stuff would work. So if you wanted to redeem for the underlying, in our case, it's actually redeemable against the cash value of what the asset is valued at the time of redemption. It's then on us to go and obviously sell that asset on the traditional market and then provide the cash equivalent to the token holder. So we've also built that process in a way which makes it insolvency proof. So for example, if Swarm was to go out of business tomorrow and you are a token holder, say of Apple stock, even if Swarm is out of the picture, we've built the process in a way that means the token holder can still redeem for the cash value of that token, which means that we've built it in as trustless way as possible in that respect, because it's not reliant on Swarm to be operational for token holders to get a claim on the underlying collateral. We know of other sort of setups or other issuance providers who have maybe set it up in a slightly different way, where there is a reliance on that business being fully operational and up and running in order for the tokens to be viable. So we're quite pleased of the way that we've set this up, because it protects token holders from anything that Swarm might be doing, whilst also gives them access to the benefits of trading these tokens on chain.
In a way, you can. I mean, first of all, I love it. I love the fact that this token are not just valuable on your platform, but they are valuable outside of it. So you have created something that's not just in your platform, but even if your platform uh, is not there, that token still holds the value. So that's really cool. That's really amazing, and I love the thought process behind building it, and the product itself. Now. I want to get into the products. This is like very exciting. So let's say if I am from Argentina, where in last few years my inflation rate has, my currency has inflated 300, 400%. If I am from somewhere in Sri Lanka, where my currency, what I held a few months ago is not there anymore. I love this product. I want to do something with it. So let's say if I'm a user and I'm coming onto your platform, uh, what kind of products do you have? What can I, what all things can I do on your, platform, on your products? I know you have swaps, you have pools, you have DOTC. There are lots of things. So can you just give me a brief overview about your products?
Yeah, so I think you've covered most of it, to be honest. So, and this discussion really has brought to life a lot of what can be offered and accessed today. We wanted to start off with a very solid foundation of a bulletproof tokenization or issuance process, and then coupled with a secure trading platform that is regulated and safe for people to transact on, whilst being fully decentralized. And I think that as a value proposition is attractive in itself, but it's just the foundation, right? This is just the start. We wanted to launch with well-known products, or well-understood products, i.e., the likes of, you know, Microsoft or Tesla stock, so that we didn't have to do too much explaining as to what those products were, because we wanted people to focus on what it means to trade in DeFi. I think in terms of what this then lends itself to going forward, it's really hard to imagine everything that could possibly be done, because the possibilities really are quite endless with this. I mean, we're getting all types of categories of projects coming to us wanting to tokenize or, you know, create secondary marketplaces that are already on chain. So one of the biggest use cases, I think, or one of the most interesting use cases is carbon credit market, for example. Highly fragmented, but we know that regulation is going to bring it into the laps of a lot of people. So where do we do this that makes the most sense in terms of trading efficiency and cost, but also is a global liquidity solution? And we think that's where blockchain really has a potential to kind of prove its use case. You know, when you talk to people in traditional financial markets and they say, right, if you could build financial market infrastructure today, would it look like these legacy systems we've got, or would it look like something that exists on DeFi today? And everyone says, you know, DeFi or blockchain, a blockchain-based solution would be the way forward, because it makes sense, because it's cheaper, and because it will eventually work quicker when we've dealt with scaling issues. So in terms of what these people can enjoy today, it really is the trading aspect. There will be moves into more of like lending and borrowing capabilities, and being able to generate yield. And then I think the third element is going to be spending. So we are in active partnerships now, which I can't go into too much detail because we haven't announced them yet, but having real world applications that basically take all of this regulatory and technology stack and actually put it behind consumer based applications. So people who want to be able to, you know, say load up a credit card and but instead of it being supported by the banking system, it's supported by DeFi. And that card then enables you to go and spend in, you know, any merchant around the world, or it allows you to go and earn money into certain yield generating activities, which are all backed by DeFi. And I think that's going to be the really exciting stuff that we're going to start to see coming towards the end of this year, taking off really in next year. And that's when we'll start to see more mass adoption, I think, of this stuff.
Yeah, 100%. And you know, one thing I can so before this interview, I went onto your platform and I signed up, did my KYC and everything, and yeah, I checked your products. One thing I really liked about your products is that it has a great user experience. It's very easy now. You know, it's definitely much better than Web2 products. That I'll say. You just need some sort of experience around wallets and other things. But yeah, definitely your product is much user friendly and very easy to use. So I'll say that. Now, while I was on your platform, I saw that there are some yields for staking, and there are some percentage APYs on staking. So where is this value being created? Let's say when I stake a particular stock or a particular token, I get a percentage of reward. So how are you creating this value?
Yeah, so it's quite a nifty little idea, really, and I can't take any credit for it whatsoever. This is the brainchild of Timo. Essentially, what we're doing is excuse me, we're enabling SMT holders, so the payment token I discussed earlier, giving them the opportunity to take advantage of the tokenization of real world asset narrative that's taking off, right? So because our platform is KYC and AML checked, there's certain people that unfortunately we're not open to. We have decided to restrict, for example, against US persons because of the regulatory attitude over there. One day we hope to be able to open it up to US persons, but right now it's not the right decision to do so. But the SMT token is it's an ERC20 freely transferable token. So if I, for example, I'm a US person and I'm holding SMT, what is the value of this token to me if I can't onboard to the platform and trade stocks? So that's where we came up with, well, we did a few sort of changes to the tokenomics of SMT and introduced a few sort of deflationary measures and ways to increase the utility of the token. And one of those ways was to come up with single side staking. So we developed a dedicated destination for this, which doesn't require KYC and AML onboarding or anything like that. But essentially, SMT holders can stake their tokens against the different tokenized assets that we have on the trading platform app.swarm.com. And the depending on how much you stake and how much trading activity happens in those assets on the platform, then decides how many rewards you get. And the rewards come from we have a pool, we have like a bucket of SMT that is dedicated to sort of marketing and incentive programs, which is all outlined in our white paper, which you can find online, and also on our docs page as well. So the rewards themselves come from a bucket of SMT that we have reserved for this kind of activity, and then but the way that you actually earn them is linked to how much you stake and how much trading activity happens then on the Swarm platform. It's kind of like, if you want an analogy, it's kind of like playing blackjack and putting roulette, and say you put all your chips on black and it comes out as red. Instead of losing your chips, you actually get all your chips back. So we see this as minimal to no downside, but a good way of indicating where retail investor sentiment is on different assets.
Yeah, I mean, this question was in my head when when I was on the platform, and this answers it 100%. And this is a real interesting way to do it. This, rewards your community. This gives an incentive for people to use your platform more. And yeah, this is a brilliant thing, win-win for everyone. So now, one thing that as soon as I started learning more about the platform, one thing, and you just mentioned that you are not open to US users. This has to be one of the most complex thing regulation wise. I mean, there are lots of regulations that you must be having to deal with. I know we talked about it earlier. So how are you dealing with those regulations, and how are you going pass through them? uh, are there any experts on your team who are helping you with, can you share more about them?
Yeah, so obviously having a top tier jurisdiction like Germany regulate you is no mean feat, right? It's difficult to get. It's arduous, and rightly so, because there needs to be a high level of scrutiny for this stuff. But we really see it as a badge of honor having that. And I think it brings with it a certain amount of trust and reassurance, certainly on the institutional side, that we're set up in a respectable way and we're doing things properly. Now, having said that, it's always really good, I think, to sort of diversify that regulatory pot and look at different jurisdictions for different, to serve different customers, certainly on a retail side and institutional side. But then also, just diversification in general is always a good thing. So we're certainly looking or exploring other options, talking to other people in the field, understanding what the experience is, both from a crypto and from a securities trading side. I think we're quite lucky that we've got a very entrepreneurial lawyer on our team, which sounds like a paradox in terms, but he is fantastic and very clued up on what's going on in the sort of regulatory space. But then also, when you've got co-founders like Philip and Timo, who they themselves have set up businesses in different jurisdictions and are pretty au fait with how sort of regulators work, spanning from the US across to Europe and beyond. You really start to build quite a rich tapestry of what the regulatory landscape looks like. I myself used to work for eToro, and which is a trading retail trading platform, and we had licenses all over the globe, and it was getting to grips with how different regulators work, how they govern, what they govern, and the attitudes to that is an interesting is really interesting to explore. So I think between us, we've got quite a good understanding of the reg setup. We're interested in talking to more lawyers and regulators who can offer interesting insight in the space. So it's an ongoing conversation.
Yeah, it's definitely good to diversify in such fields, and I'm sure you are doing it right way. I would wish best of luck to everyone in your team. You are building an amazing product that I think lots of people in the world want, and we wish everything goes right. Now, what are some new features and some new products that you are building right now that will be released soon? Like, what are you, what are new products that you are going to launch?
Yeah, so without giving away too much alpha, I think one of the biggest things that we probably would share with you all is that we're looking at how to bundle these assets sort of in a regulatory compliant way. So certainly on the sort of NFT side, where you've got um, different types of asset classes that maybe haven't been brought into like a financial trading sphere before, and might need a lot of due diligence, for example, whether those are privately held assets or in the luxury sphere, for example. We're actually developing a product that will help bundle these together so that you've got almost like an asset-backed token that has a category of different NFTs within that. So then, from a due diligence perspective, you're only doing that on one token as opposed to a series of different NFTs, and that becomes quite an attractive value proposition for traders, as well as people wanting to fractionalize ownership in different high value assets, whether it's real estate, cars, watches, you name it. So that's probably the most interesting product that I can share with you today, which has real world tangible use cases that people are actively coming to us at the moment and saying, right, how do we do this?
Yeah, I mean, bundling NFTs is a really cool idea. Uh, okay, now this is the question that I would like to hear from Timo as well, if he is available. So, how do you think Swarm will impact the world in long term?
Timo, are you there to be able to answer? I think he might have had to join from his computer in the end because there's a big storm happening in Sweden.
Oh wow!
Yeah, so we've been cursed by the heavens, unfortunately. I'm
I hope you are all right, Timo.
sure he'll be fine. Can you repeat the question again? Sorry.
How? So the question is, how do you think Swarm will impact the world in the long term?
Wow, I mean, it's hard not to answer this question without sounding terribly vain, but from where I sit and from the spheres that I've moved from, both from a traditional financial point of view and then moving more into this tech in recent years, I really do see this at being what we're doing at Swarm as being sort of very much vanguard. We're kind of on the frontier of this tech moving in a really credible way. But with that comes a lot of responsibility, because I feel that if we get this wrong, the tokenization of real world assets and what it means to move assets on chain, if we get that set up wrong, then I think we may have blown it for mass adoption of blockchain technology. So I would urge anyone sort of who's operating in this space along with us to really do it right. You know, let's keep talking to each other. Let's share information and experiences about how to do this right, so that everyone can benefit from this. And it's not just us who had this idea a few years ago that thinks that there's something in this. This is actually going to be something meaningful that people are going to end up using in the next few years, and not even think about the fact that it's on blockchain, because it just happens to give them better functionality, yet better user experience and more options.
Yeah, 100%. That's a really cool vision. Katie, thank you so much for joining us today. It's been real pleasure hearing from you, learning about real world assets, tokenization, and all the stuff that Swarm is doing. It's a awesome tech. It's something that everyone wants. We wish you best of luck, and yeah, thank you for joining the spaces.
Yeah, thank you for having me. Sorry about the change in programming that you got me instead of Timo, but hopefully we got through all the points okay, and you guys got to learn a bit more about us. So thanks for having us and letting us talk a little bit more about what we're doing.
Yeah, thank you so much. We definitely got through all the points, and it was really an insightful conversation. Thank you everyone for listening today. If you are listening on Twitter Spaces or if you are listening on our YouTube, thank you for joining us. We'll see you next time. Bye, everyone.
Thanks. Bye.